Another very interesting panel is starting now regarding real estate. I think there are a lot of opportunities ahead in the Greek real estate market. And these prospects and opportunities will be presented by these excellent panelists, moderated by Mrs. Kloy Tsiaga. So I will let you continue the discussion. Thank you all for your participation. Kloy.
Okay, thank you. Good morning, all. We're close to noon, but in any case, it is a great pleasure to welcome you all today. And first of all, I would like to extend my thanks to our audience, to you for your presence, to the organizers of this forum for their excellent work, and to our distinguished panel of speakers for contributing their valuable insights to this discussion. Our firm is honored to participate in this panel because we have been involved in a wide range of significant real estate initiatives, commercial and residential projects, including branded residencies, as well as major developments in the hospitality sector, several of which have been qualified as also as strategic investments. And we're trying to operate as a comprehensive one-stop shop provider of legal and advisory services for potential investors in Greece. So, to focus on our panel, on the topic of our panel, Greece's investment landscape is undergoing a remarkable transformation driven by renewed investor confidence and a strong pipeline of real estate projects that continue to reshape the country's economic outlook. In recent years, Greece has undertaken substantial steps to modernize its regulatory framework and foster a business environment that aligns with international standards. Notable progress has been achieved in areas affecting real estate development, the completion of the national cadastre, the finalization of forest maps, the resolution of outstanding urban planning issues, as well as the establishment of local urban plans tailored to the specific characteristic of each region, enhance transparency, provide clarity, and offer a stable and predictable framework for both domestic and international investors. Also, Greece has adopted fast-track procedures that streamline the approval and implementation of major projects. So the result, and then we will start with our distinguished speakers, the result is a market that today presents compelling prospects for both institutional and individual investors. Real estate remains a primary channel for foreign direct investment, supported by sustained demand and strong long-term growth potential. It's my pleasure to turn now to our distinguished speakers for their remarks and then contribution to the panel. Dika comes from Athens Economics, a very successful economic and commercial real estate consultancy and agency. And Dika would like to have your opinion, your insight, why real estate in Greece?
Okay, thank you to the organizers and thank you to all for attending. Let's start with setting the scene. So why real estate in Greece? I think there's three major reasons. First of all, the economy has turned around following a long 8-year or 9-year financial crisis and has proved to be very resilient throughout the COVID lockdowns, etc. So cautiousness followed, but still the economy was very resilient and bounced back. Secondly, it's the political stability, which combined with a business-friendly environment facilitates important investments. And third, but last but not least, is the major EU funding instruments we have, such as the RRF, the Resilience and Recovery Fund, which has already been mentioned by other panelists earlier today. It's very important. It amounts to about 36 billion of funds and relates to either grants or low-interest loans on a 50-50 basis, basically, and it targets green transition, innovation, digital transformation, and social-related investments. So all these, to date, only about 65% of these funds have flowed in. So even though the target is for the program to end in 2026, I believe that it is very likely that it will be extended. So this all creates an environment of confidence, which is essential for real estate. And then if we move on to the micro factors, we have the following parameters. First of all, we have supply constraints. The main reason for this is because we've had very poor construction activity during the crisis. Then we have very healthy demand levels driven by many factors, but mainly consolidation strategies, tourism-driven externalities, positive externalities, like, for example, the repurposing of old buildings into hospitality units, and also the small share of remote working. Unlike other, for example, US or Anglo-Saxon environments, we see that in Mediterranean countries, remote working has a very small share, and that, of course, helps real estate expansion, or at least does not undermine real estate. Then we have significant public policy proactiveness, for example, as far as town planning initiatives are concerned, and infrastructure improvements. And we also have notable liquidity and significant activity by both domestic and international players, and that is key. Now, in terms of factors improving the whole environment for real estate, there are two qualitative factors I need to stress. First of all, we have increased transparency in real estate. This did not used to be the case. I remember when I went back to Greece a couple of decades ago and tried to liaise with real estate agents to find out what data they had. They were never happy to share any data, and some of them told me, well, we don't keep such stuff. So the level of transparency has increased amazingly. We are not a fully transparent market, but we're not opaque like we used to be, so I guess we're in the semi-transparent stage. The other qualitative factor that is important is that more and more skilled professionals are joining the ranks of the players involved in real estate, and that is very important. So both factors I reckon to be very important, especially when I wear my econometrician's hat and see how we can look at data, rely on data, create time series, and therefore understand the market and forecast the developments. So all this argues for a resilient and solid performance of the real estate market. So if I move on very quickly to some figures, I can give you data for 2024. 2025 data are still sort of not completed, of course, but we usually have them with a time lag. We get them in about 3 months later. So I think that by spring 2026, we will have a very good picture of what happened in 2025. So the picture of 2024, which is already established and confirmed, speaks about hospitality taking the lion's share, 50% of all investments. We have recorded 2.5 billion of investments for commercial real estate in Greece. This relates mainly to institutional investment, and hospitality has been taking the lion's share solidly since 2018. You've all heard about how investors really aim at hospitality units. And what they usually do, or not usually, always do, is they try to acquire brownfields, they try to acquire older hotels, and they add value with their works and with green transition. So this is how it usually works, given that planning permissions is a delicate matter in Greece. I'm sure that Dimitris will be talking about this in a minute. So hospitality takes about 50% of investments. The office sector, 10%, and that relates mainly to sustainable offices, green offices, LEED certified in their majority. Retail, about 2%. Industrial and logistics, about 2%, i.e. about 54 million. That was the 2024 figure. And land plots, 14%, greenfields. So the trends seem to be similar today, but as I said earlier, we will not know before the spring of 2026. Now, I would like to come back later to the logistics sector, where our company benefits from a substantial expertise and knowledge, but would like, before that, to mention 2 points at this. I'm nearly there. I'm nearly done. I'm nearly done. I'm nearly done. First, that larger amounts of actual funds are invested in hospitality because all the hotels are heavily leveraged. So when we take into account the money that comes into hospitality, we have not added in the loans because we do not have enough information about them. And secondly, that there's a very high percentage in land development, in land purchases, because a lot of Greek companies like to owner-occupy and owner-develop their own premises.
Thank you, Dika. Thank you for the interesting contribution. Dimitris Andriopoulos, coming from Dimand, a leading real estate development company in Greece. So, as one of the major developers in Greece, could you share your experience and perspective on the present market environment?
Yes, thank you very much. But first of all, I like to share some different things with the audience.
Of course.
I'm coming every year in New York, in Capital Link, because it's the opportunity in 2 or 3 days to meet all the Greek executives, which takes more than a year time to do it in Athens. So I was wondering every year, who is not Greek-speaking in that audience today? Can you please shake your hands? Is anybody who is not fluent in Greek? One.
Two.
Two? Three. So why we do it in English and not in Greek? But anyway, so...
Yeah, good point.
You know, for us developers in Greece, New York and of course other cities is part of our educational trip. And the other day I was visiting the new JP Morgan headquarters building and also across the road the Waldorf Astoria. And strangely enough, I always discover that development is even more difficult in New York than in Athens or in US than in Greece. So from the development point of view, things are getting better and better in the country. The general manager of Waldorf Astoria was telling me that he had to deal with 352 unions in terms of the employees. And in Greece, at least today, we have much less. So, and the other thing I felt proud as a Greek was the yesterday experience with the Rebrain Greece, and in a full room of 1,000, maybe 200 attendants. I mean, we saw what is what we can expect as future in our country and in our market. What was amazing was the statistic that 650,000 Greeks left abroad the years of the crisis, and 450,000 of them, they came back. And I can reconfirm that. I mean, we are a company of 100 employees, 107, and the last 5 years, Young people between 30 and 40 are coming back from Germany, UK, US, and elsewhere to work back in Greece. And that is very encouraging because there is not only the Greek diaspora returning, are young people, professionals, and they bring back to Greece expertise and, experiences they have from abroad.
Yeah, it seems that the Rebrain Forum was a great success.
Exactly. So I'm very optimistic about our market. I can say that still we cannot satisfy the demand in the market for a number of reasons, construction capacity and many other things. Hospitality sector is thriving, but everybody should be careful with hospitality, and we have to see always the qualitative part of it, not the quantitative. I mean, in Greece, we have, if I'm not mistaken, 40 million visitors. Is a number...
That's true, yes.
Yeah, that's
yes.
true, almost. So
yes.
we do not need more. We do need more quality hotels or international brands, but we have now to maintain that number and support that number with infrastructure. In our business, in real estate in general, the biggest challenge in the years to come is going to be the quality and the quantity of infrastructure. Not only the heavy infrastructure, meaning airports, ports, and highways. Actually, maybe now we have one of the best highway system in Europe, underutilized as well. They say expensive, but is not. But we have to pay attention in what is called light infrastructure, meaning the municipalities and the prefecture, they have to do necessary things concerning the water supply, the sidewalks, the garbage collection and all that stuff. Because now, as an example, Athens is becoming a 12-month destination.
Exactly.
Is a city break now officially. Thessaloniki the same. And the infrastructure is supporting, the visitors of 10 years ago. This now should be modernized. And the biggest challenge, the years to come, the next 5 years, in the infrastructure, because you see now we have every summer in the islands electricity cutoffs, we have shortage of water supply, things are not working properly, and I think this government, and I'm not saying that from the political point of view, is the one which understands the issue, and in the years to come has a lot to be done.
And it's true that these problems do not affect only the big cities, only also very popular islands because of the increase in tourists. They face the same problems. So let's, Dimitris Manoussakis, representing Savills, a global real estate services firm offering advice and services for commercial, residential, and rural property. Dimitris, we would appreciate if you could share insights from your involvement in investments in commercial real estate, including offices and retail assets.
Thank you, Kloy. Thank you all for attending this panel. I think it's one of the most important panels because real estate is a real locomotive of the Greek economy. And thanks to Dika and Dimitris, I have almost nothing to say about the scene. I will improvise a bit. However, I need to comment on the last point of Dimitris about the so-called carrying capacity of the islands. This is a very important issue, and we need to take care of it sooner rather than later, because it may cost us a lot. We have seen islands which are flagship to the Greek tourism, like Mykonos and Santorini, to be at the margin of how many people, how many visitors they can accept on a daily basis. Now, coming to the sector that we have discussed to cover, offices, although I believe Dimitris is the best person to discuss about this, since he has made numerous developments in Athens and in Thessaloniki now. I'd like to give you a very first position statement. Although it represents 10% of the actual foreign direct investments and in general investments in real estate in Greece, it's very important to remember that it's one of the core sectors. It offers primarily stabilized assets, and as the situation stands at the moment, the Greek office market offers a combination which is exceptional for the Greek, let's say, market conditions. It offers continuous rental growth and very competitive yields, which offer higher and better returns to foreign investors who have decided to invest in Greece 7 or 8 years ago. Now, some hard numbers. Prices in the office sector have gone up year on year by almost 5%. Athens obviously is the leading market, the largest market, and it offered a price increase of nearly 7%, followed by Thessaloniki, which is the new, in our opinion, and in your opinion, as far as I understand, new market for offices, with almost 6% increase in prices. Now, going to what we call the stock, the stock offered. We have nearly 2.6 million square meters of grade A and grade B offices in Greece, almost 90% situated in Athens and Thessaloniki. And there was an increase of almost 4.5% between 2024 and the first 3 quarters of 2025. The average vacancy is a bit more than 10%, but if we measure the vacancy on what we call grade A plus offices, this is 1 digit and even below 5%. This shows a severe supply shortage and a shortage in terms of quality, because whatever is developed, which is either LEED or BREEAM certified, it's taken immediately, either by domestic companies or international firms which would like to extend their footprint in Greece. Prime rents, and this is another success story for the office market. In the center of Athens, we are fairly close to 38-39 euros per square meter. We believe that in the first quarter of 2026, we'll see agreements, lease agreements that will exceed the 40 euro threshold. Which means that we are back in the 2006-2007 levels, which was the peak of the market. And I believe that the main challenge at the moment is the workplace models. Hybrid is an issue. I believe that most of, especially the Greek companies, are now in a position to send a message, return back to our office. And this will create some further increase in demand. Foreign companies, though, are in a different mode. They are trying to exploit the hybrid model in order to downsize their presence in the market, and we have seen such examples. Finally, I would say that in terms of yields, Greece, and especially the Athens and the Thessaloniki office markets, remain robust and more competitive than the Southern European rivals by at least 100 basis points. I believe that average yields are in the order of 5.8, 5.9% for prime offices in the city center, while, let's say, in Madrid, it's 4.6, in Milan, it's 4.2. So Greece can offer a very good return to investors who will decide to go for stabilized assets. And I would stop here.
Thank you. Thank you, Dimitris. So, Angeliki, you represent Orilina, a rapidly evolving Greek real estate investment company with a diversified portfolio. What developments do you identify in the real estate investments in Greece?
Okay, so thank you as well. It's an honor to be here and share the panel with such distinguished professionals. So everyone has told you that Greece is on the move and opening new doors to investments. This is the case. We see Athens being repositioned into a metropolis of various offerings, while the rest of Greece, due to its natural beauty, invests a lot more in hospitality and new developments. Now, one of the drivers of this change over the last 10 years is, of course, big projects like the Ellinikon, which is the largest urban regeneration that's happening in Europe, and what they call, my former colleagues there, a new coastal city within the city. Ellinikon has brought a lot more of innovation and new set of standards and specifications for the Greek development. How this, for example, refers to the acknowledgement of international architects that have been in the city. Kengo Kuma, Foster and Partners, UN Studio are just some of the names that are developing projects there, and they are marking a new skyline, a new set of buildings, and setting landmark architecture within the city. With them, of course, hospitality is a second key factor, just by the fact that in the Athenian Riviera we have such great brands and operators who have increased the seasonality and have brought more visitors to Athens is a key factor. And this brought as well another topic, which is residential concepts. It's the first time in Greece that we are now developing branded residencies, which show us that people have a different way of living, asking more amenities, but also see their residencies as more of an investment. And obviously, the topic of infrastructure and green technologies and smart city that will facilitate the quality of all is a key factor in this sector. So Orilina, quite early, invested in the Ellinikon project. We are progressing with 2 projects in the coastal front. One is a niche residential product of 20 exclusive residencies. More than 65% is already sold. And it relates to this topic of new residential interest in the area. And on top of that, just adjacent to this building, we are developing a new concept. It's a private club, a new social hub for people to connect there, having a great way of different synergies, not just sports, like the former, I would say, sports club in Athens and Greece, but a lot of gastronomy, wellness, open areas, things that can give them a different way of living all day long. So these are the key residential and alternative residential topics that we can discuss later as well.
Thank you so much, Angeliki. So we don't have much time, but we can have its speaker can focus on a matter, on a certain matter. So, Dika, I understand that you consider logistics centers as a very important factor of real estate, in the real estate projects, in the real estate development.
That's true. Logistics has become very hot. I think after hospitality, logistics and branded residences are the two hot sectors that people, investors, institutions, are focusing on. Now, back in 2014, when we first initiated and succeeded in achieving the first institutional investment in the logistics sector, that was indeed a pioneering activity, a pioneering act, and we did not expect this trend to surge to these levels today. Today, everybody, all institutions, domestic and foreigners alike, are looking for logistic facilities to acquire, and the competition is really fierce. Now, on the leasing side, take-up is very, very active, very successful. About 200,000 square meters are taken up every year in Greater Athens alone, but Thessaloniki is quickly emerging as a second hotspot for logistics. Rentals in Thriasio, which is the most attractive area in Athens, it's to the west, attracts about 70% of all interest relating to either transactions, leasing transactions, or purchases. And rentals are now achieving 6.20, 6.30 euros per square meter per month. This is slightly higher than our Balkan neighbors, but is much, much lower than all the core mature markets, of course. Now, an interesting feature is the pre-let activity, because for every asset that is being developed or that is there, we have about 5 or 6 very interested, serious suitors. So what we find is that as soon as word is out that a scheme is obtaining a license, a building permit, then straight away we have interested parties trying to get a pre-let agreement. So the sector is really, really very, very hot and has gained a lot of momentum, and we expect this to continue in the short to medium term. Now, investment levels would be even higher, A, if we had the right product. We don't have enough product, supply is short, and B, if it hadn't been for owner occupation, which is a very important factor in the logistics sector. More than a third, about 40% of logistics space is owner-occupied, and we're not surprised to see large companies like Jumbo, like Sklavenitis, like Kafkas, wanting to develop their own facilities and owner-occupy them on their own terms. Now, demand is driven by location parameters, internal height parameters. Everybody wants now more than 11 meters internal height for obvious reasons, and sustainable technical specs. We have an increasing number of LEED and BREEAM certified facilities. Infrastructure improvements, of course, are very important. For example, ports and road transport, although rail transport remains a rather sensitive factor to date. Net prime yields, I'm trying to speed up. Net prime yields range between 6.25 and 7.25%. And lastly, to name, we do have some challenges, of course, like every sector has challenges. And here, the challenges, I think, mainly relate to labor shortages. So they affect construction and transport. To give you an indicative example, about 10,000 lorry drivers are missing today from transport companies. So labor shortages are a very important challenge. Thank you.
Thank you, Dika. Dimitris, would you like to add some concluding remarks on the prospects of the Greek real estate market?
Yeah, I will try to describe the opportunity in the country in terms of real estate with the following comparison. If we compare Lisbon and Portugal with Greece, we are 10 to 15 years behind. Similar population, similar GDP. If we compare Athens with Lisbon, we need another 10 to 15 years to reach the same level. So one message is that our sector, real estate, is going to be thriving for the next 20 years. Many people, they ask me why we don't go to Romania, Bulgaria, and I say we're fully booked for the next 6 years, and we expect to be fully booked for the next 20. So one message is that. Second is that as a company, we do not develop buildings anymore. The last 10 years, we develop neighborhoods. We are active investing and developing 3 regeneration projects, one in Piraeus, it started 10 years ago, and we're going to be there for the next 10 as well. One in Thessaloniki started 7 years ago with different multiple projects, and we're going to be there for the next 10 as well. And third, the city center, it started again in 2017, and we are active now with 7 different projects. So the future in terms of city development is the regeneration aspect of it. One, because you change the neighborhood, you help the local infrastructure, and that is ending up always to be the private sector with the public sector. I strongly believe that the public sector cannot proceed individually, and us, the private companies as well. So the PPPs, not with the classic form, but the PPPs in terms of understanding, co-investing, co-developing with the municipality, with the central government, is the absolute future. And I will finish with that. Thank you, Dimitri, very much, because you gave me, without knowing, a great help. I tried to convince the gentleman who is present here and is the CEO of a big company to consolidate the offices of his organization from 4 different buildings to 1. The one I propose, which we own the plot in Zade Construction, is a AAA spot. So I gave him a 32 euros per square meter per month.
Depends where the...
And triple A. And I felt that I did a huge mistake. So later on, we're going to have a coffee with a gentleman and a conversation, and I'll give you a very good 2% of the extra.
Of the extra.
Of the extra.
Thank you.
If I achieve the extra over the 32.
It's the first job that I'm closing in this forum. Thank you, Dimitris. Yes.
Yeah, now you're happy because you're going to close this job. You can also add your concluding remarks on the prospects of the residential market.
Conscious about the 20 seconds that we have, I'd like to say that the new, in our opinion at least, hot sector is residential. And I wanted to have a bit more time. However, I'll give you a very brief overview. Residential, I think, is going to be the new hotspot of the real estate market. And as Dimitris says, it hits to what he is discussing about regeneration. Because so far, the residential redevelopment of neighborhoods has not happened. It's a difficult I would say, issue that needs to be discussed between the private and the public sector and the municipalities in order to create added value, to improve the quality of life, and also to offer affordable accommodation, which is a serious issue, especially for young professionals and for households in general in Greece at the moment. Prices have gone up. And every year we see at least a 10% increase in even areas that were considered as affordable areas in Athens and Thessaloniki. Thessaloniki is leading the way at the moment. It faced increased in prices by 15% last year, higher than Athens, which was below 9%. So it's a big story. I think we need to spend a lot of time and effort to understand better the residential needs and the expectations of the general population. The trends are obviously for branded residences. We work quite a lot in this field. We have an expertise. However, this refers to high net worth individuals because prices there are really high. I think that we should move in parallel to both directions, affordable housing and also the luxury segment. And I rest my case here.
Thank you, Dimitris. And Angeliki, in your view, which segments of the Greek real estate market
currently present the strongest development?
Residential, of course, but alternative residential is the second point, which takes into consideration the needs of the demographics and also the lifestyle. So when we call it alternative residential, it's not just branded residences, it could be student flats, but also senior living communities. So these are the key projects that we as Orilina, we are focusing to develop further in the coming years. And repurposing some of our existing stock of buildings is a key factor there in such uses that will provide recurring income, but also a diversified portfolio mix. So in these developments, of course, sustainability is a key factor and energy efficiency. So all these contributions to the existing stock of buildings will be significant, we feel, for the urban environment.
I want to add something.
Yes, of course.
Because, I mean, the organizers, they gave us another 5 minutes. I see the 3 zeros, but that means another 5 minutes,
Exactly.
many times.
In any case, we've
run out of time?
What I
So
want to add is that residential is becoming a huge political and social issue everywhere.
yes.
This year in MIPIM, a UN official said that 1/3 of the global population is not happy with the house they live, or they are completely without a house. So this is becoming, let's say, a threat for everybody. And governments, they have to become creative to sort it out, because they take a number of steps to support this and that, but many times, instead of solving the issue, they do the extreme opposite. The first step, in my opinion, to help that is to have a shock of supply. I mean, Austin, Texas, they did it with 60,000 units. We have to be creative in Greece and elsewhere, because the number one step to stabilize the prices is a shock of supply. And then are all the other delicate measurements. Because in any different class of resi, a huge amount is missing. You call it social, you call it affordable, whatever you call it, is missing. And we do have successful examples to follow. The example of Vienna and Paris are the examples somebody should analyze, Greekalize, and then follow.
I think as one final point, the problem here, Dimitris, in Greece is a matter of scale. Yeah. It's a matter of scale. We don't have a similar scale in our assets as it is in the US or elsewhere in Europe.
Yeah, it's not only scale, it's also money, because the municipality of Vienna and Paris, they do have the money to do such programs. The municipality of Athens is missing the capital, first of all, but they have to create solutions. I mean, we have ex-military bases. I'm not saying the specific one in Thessaloniki or elsewhere, but they have to do a social program for unused, let's say, ex-military facilities. and create, and not ghettos, they can have at the same place social, affordable, and regular resi as well. Vienna is doing that successfully. How they do invest in architecture.
It's true that in order to resolve this problem, we need a comprehensive governmental intervention. Otherwise, it cannot be easily solved. And we've seen that it's a problem common in many European countries. In
New York as well. I remember 10 years ago, a one-bedroom flat was 50 square meters, $4,000 the monthly rent. The same one now is $6,500. How much money you have to earn to pay $75,000 for a one-bedroom apartment? Yeah.
A lot.
This is going to a huge wall, to a dead end.
So, thank you. I would like to thank you all, to thank the distinguished speakers for all the valuable input and also for the exchange of opinion that made more interesting, I believe, the discussion. And I hope also that our audience found the discussion really interesting, and we gave you a real picture of the real estate market in Greece. Thank you.